Hello, welcome to Cryptonomy. My name is Mo. I'm a computer and data scientist. I was able to turn a small, humble crypto portfolio this cycle into six figures. So if you would like to know some of the strategies that worked for me and some of the mistakes that I've done along the way, then maybe try and watch this video. And if you enjoy it, please like and subscribe. So what we're going to be talking about today is the current phase that we're actually seeing right now. And there's a lot of misconception that is happening right now that people think this might be the bottom of the range, right? Of the first leg down, but I believe it is not quite then just yet, right? Um, so in every bear market, we see a similar structure. We do see kind of the first leg down, the first major move of the bear market. It is usually very deep and destructive. There are two major moves that happen in every bear market: the first leg down and the second leg down that goes into here. And there's also the consolidation phase, right? If we just delete that, there's also this consolidation phase and this accumulation phase that happens here somewhere, right? And you can even put it up to even there. So if you compare it to previous cycle, this is where I believe we are, and I'll provide some reasoning for why is that so. Now, we have talked about it a lot in previous videos, but just in case you're new to this channel, then this might be just a refresher to the old and something new for the new, right? So in the 2018 crash, this was the first leg down, and the first leg down is actually pretty major because it forms the support line for the consolidation phase that happens after the first line, right? After the first leg down. So this is the consolidation phase that happened during that period. And usually this short-term relief rally that happens right now, usually it happens around right December, January. It ends in, sometimes late December, early January, and it starts early December. This usually forms the top part, the top's resistance line for the consolidation phase, and the continuation of the first leg down, the bottom, forms the resistance line. So this first leg down move is actually pretty important, and it should be analyzed for everybody who actually cares about the current market conditions in Bitcoin, right? So this is the first leg down here. You do see a support line that goes right here, and during this short-term relief rally, right, which happens in December usually, does form the kind of the top, right, of the consolidation phase. So if you assume this is the consolidation phase right there, this is just manipulation going over the range, but still respecting that line, right? And you finally break it. When you break that low that was formed with the first leg down, you finally reach the accumulation zone of the bear market. So it is quite important levels that are happening right now. And the first leg down doesn't only um, form the support for the consolidation phase, and not only define the accumulation zone from the bullishness that may come after, it actually marks the turning point as well for the start of the parabolic run for the next bull market. So that low that we will form here is quite major. Right here, that kind of formed the support line for the consolidation phase and the resistance for the accumulation phase. Now we did again manipulate above, which this move here, I believe it was a foreshadowing for the event that came after, right? But reality did set in, whether with the help of a black swan event or not, COVID-19, we did come back to that zone right before we actually continued to the parabolic run. So in a way, the idea did hold in here, but not in full ways, right? This acts like a force, and you can see how the force there was pulling. It was like, oh, you wanted to go up. There was a lot of happiness and euphoria, right? Not quite euphoria, but there's a lot of greed that was happening during that period. But reality did suck it back in, and it did act as a force. By minimum, we should understand that it could play out in a similar fashion, right? So yeah, right now we did form kind of the low, if nothing changes, right, of the short-term relief rally that we're having, and I believe this will act as the support or near the support, right? We might not touch it, but be under it. We might manipulate above it, but nevertheless, I believe this range is quite important for the next consolidation phase. We can maybe try and determine the resistance line, right? The support line for the consolidation phase, and how you can see that, right, is by going over the previous market cycle and actually checking some of the things that may have happened. And what do you see is we usually form it at um, the period where the last leg up before the top has happened, you know, that consolidation phase, maybe the last two legs here. So the last two legs, and that was formed here, and you get something similar when you actually analyze all the data from the previous leg downs. You get a range that works about here, and it does intersect. Both point views do intersect here. So if you imagine this is, for example, the one peak here, second peak here, and that's the phase that led to that peak, that's the phase that led to that peak, then you can draw a line in the sand and be like, yeah, this might be that. And something similar happened right there. For example, this peak, the consolidation phase before the last peak, that was the line that sets it. The consolidation phase before that peak, right? And those two peaks were quite similar, so maybe that's the reason we saw that thing, right? And the same rule applies. The same rule applies, right? That was for 1 day period, right? That consolidation phase. If you zoom into the 12-hour, you see 3 bars of redness or cyan in that case, but it refers to redness, and you would see that formed as a consolidation phase later, right? So it does play out in one form or another on smaller time frames, on different rhymes. History does rhyme, not repeat, but it's just it's not a sure thing, right? That phase could be here for all I know, right? By the way, nothing said in this video is financial advice. It's only for educational purpose only. I hope it helps you, but make sure to know that this is only one piece of the puzzle, and the whole picture does need a few puzzles to work out, right? So please do some more research before you make your final financial decision. So yeah, that's only speculation at best here. Really, nobody knows where that, but it's found it interesting that both levels do intersect. If you do like the first leg down, which we've talked about a few times on this channel, if you watch some of the other videos, we went in depth in it in one of the videos where the bear market is not done or something, right? We actually analyze it in full. We just take the data from every bull run of the first leg down, and we form a range from the top here. We view these percentages and days, and we form that. So yeah, that's why I believe this phase is not done yet. And if you go do similar thing to the first leg down, right? If you take the data, right, this one lasted 32 days and it was 24% almost, if you round up. Similar here, 25 days, 53%, and 9 days, 43%. Yep. Oh, by the way, this I take two percentages because if you analyze, this is where the resistance line happened for that zone, right? So I also included that percent, but the true low, even though it happened for a few hours, right? That's why I did not include it. It could have been some deviation or something. It happened for a few hours, but the wick is there, right? And that's why I like to take that one in case, but I included both wicks in the calculation as well for reference. So that's the two calculations right there. So remember, that's the bear market starting, when the period. In that case, this is when the bear market started, but this is the period at which the short-term relief rally started, and they all coincided in the month of December, including the cycle, right? November, but the cycle ended a little bit earlier. That's why you maybe expect it to go back a little bit further, right? But 23, 54, and 43. And if you see all of them are kind of, if you take that percent, then all of them are kind of heading to be shorter in a way. And this is the reason why I took the smaller range, right? 23%. This box is from here to here, 23%. And I also took the 32 days. I did not take the average. I took the largest range. just to know that this is the maximum that this phase will last for. But the breakdown could happen anytime before that, of course, or after. So of course you have to, these boxes are not like set zones where the price has to play or stay. It can deviate above, below, forward, and possibly behind in some cases, to certain levels, and probably maybe even more, right? This is all just probabilistically speaking and full speculation. Like this is as speculative as you can get, right? But at least we're trying to make some more informative decisions than most people by understanding percents and history, and understanding what things can happen when. And interestingly, actually, this zone right here happens in January, February, right? And if you go back here, the bottom is usually found in January, February of the first leg, right? February first leg, and except the other first zone where it happened first time in December, but we did revisit it in February. And guess since December passed, we will probably see that in February. But in December we did have the strength, right, that we always have. So here we also actually touched it again in April, and if you notice, we do touch it here again in April. Here we broke it much later, but I want to note that after May, we did break here something, which was the 20-week SMA. And in May, end of April, we usually break something at some point. And I believe that's going to be the consolidation phase that's going to break, right? Here, I believe in February, in February we will reach here, as history says, right? Or probably late January. This is all speculation at best, and we do not know what's going to happen, of course. But yeah, the months are working in our favor. What's happening before is showing that it's kind of happening after. And to answer the question that we started with, the current cycle, or the current short-term relief rally, sorry, I was checking the time, is probably gonna end quite soon. All right, based on history, and this is the maximum range, and based on the month and how everything is playing out, right? And everything that's been discussed so far. We're probably gonna go down to around this zone. It could be higher, it could be lower. We're really doing our best here to just make our most educated guesses. But the data shows that we should be breaking our range quite soon to the downside. Even though I also want to outline that I think we might actually go to the 20-week SMA before we actually come down to the 200-week SMA, right? And that's for the reason that we always kind of retest 20-week SMA in one way or another. Not always, actually, there was one cycle which we didn't, but since the 20-week SMA, I feel like, see here we actually tested it as well, but that was within the consolidation phase. If you pull out the 20-week SMA, we might be getting some better. Oh, here it needs to be further. But when we're within that range, we do usually test the 20-week SMA before we actually head to where we need to head, except the first cycle, where that was tested very early, and then we quite just broke down. But here we did, I believe, test the 20-week SMA, right? Or even fake out above it and we go down. But we do usually revisit them before we continue our down trend. So it's just one thing that we should also look out for. Even though we think the main direction is down, it is still possible to actually head higher for the next few weeks before we actually continue down, unless other variables come into play, right? Anyway, I do hope you actually enjoyed this video. If you do enjoy it and you watched this far, do please leave a like and subscribe, and I'll see you in the next one with more data-driven approaches. Peace.